This is the volume profile, and it can give you entries so precise that the moment I started implementing this into my own personal trading strategy, I instantly saw my win rate start to skyrocket. And after watching this video, you will not only know how to use the volume profile, but would know all of my secrets on how I personally use it in my own personal trading strategy. And at the end, we're gonna look at a real AMD trade that resulted in a 300% move, all because the volume profile flagged it before it even happened. Now, I just released my Telegram. I share all the plays I'm watching, useful trading tips, and a ton of value. The best part is, it's completely free to join. If you want to check it out, I'll leave it in the pinned comment. I'm sure most of you have heard of normal volume. It's easily one of the most downloaded indicators on the internet. You get a big volume bar on a big candle, must mean something important happened. Cool, super helpful, except it's not. Here's the thing with normal volume. Well, yes, it can be somewhat useful. Normal volume is based on just time intervals. The default volume bar at the bottom of your chart tells you how much was traded that day, but it has no idea what prices the real buying and selling pressure is occurring. That means every single day, you're likely entering trades at the exact price levels where institutions are offloading. So the question becomes, what if you could see where the volume happened, not just when? What if every single price level had its own volume bar attached to it, so you could instantly see which prices institutions were actually interested in? That's where the volume profile comes in. The volume profile is basically just a normal volume indicator, but flipped on its side. So now instead of seeing volume over time, you now see volume per price level and see which price levels had the highest amount of volume. And if you're thinking like I'm thinking, we can use this to our advantage. First things first, go to TradingView. If you don't yet have it, I'll leave a link in my description. Go to the Indicators tab, search Volume Profile, make sure you choose this fixed one right here. Once you have selected it, draw a line from a recent swing low to a recent swing high. Next, go to the settings of the indicator and enable the volume area high and the volume area low. This is very important. Now, throughout this uptrend, we can easily see where the strong points of interest are. In this uptrend, we can see areas with high distributions of volume, and we can see areas with low distributions of volume. In other words, a lot of trading happened in these areas and less trading happened in these areas. Usually areas with low amounts of volume means one side of the market is dominating the other. So either buyers or sellers are clearly winning by a landslide and price isn't there for very long, which is why there's low amounts of volume. In areas with high amounts of volume means there isn't such a clear winner and there's a big ongoing fight between the buyers and sellers. To give you some sort of price action example, it'll often look like this. So here we have low amounts of volume, then we get high amounts of volume, then low amounts of volume again. So price will most likely look like this, where it's going up fast without a lot of hesitation during these low volume areas. Then the moment we start hitting high volume areas, price will likely consolidate and start moving sideways, spending a lot of time here, which is why there's a lot of volume. Then we start hitting the low volume areas again, where price again moves freely without a lot of hesitation. So to put it simple, price will have big spikes in low volume areas and will consolidate more in high volume areas, which if you use just this in itself, you could easily predict what price was about to do. When using the volume profile, you'll have three main lines you'll need to pay attention to. This red line, which is what's called the point of control, or in other words, the point in this uptrend that had the most amount of volume or where the most amount of trades were active. Then you have the volume area high represented by this line and the volume area low represented by this line. In between these lines creates this zone, and this zone is where 70% of all volume was traded. And if you use it correctly, it can show you exactly where big money is likely entering and exiting. So an example, say we have this volume profile. We have the point of interest, we have the volume area high and the volume area low, which means 70% of all trades happened within this area. Anything outside this range would be considered an anomaly. Or in other words, very cheap prices where smart money wants to buy, or very expensive prices where smart money wants to sell, based on this trend's historical statistics. So oftentimes, price will go below the value area low for a short period of time and will want to mean revert back to the point of interest and spend more time there, making this spot a great opportunity to buy. high. Same goes the other way. Price will go above the volume area high for a short period of time. Big money will want to sell here because prices are very expensive based on past chart history and will eventually mean revert again back to the point of interest. So a very easy high performing strategy would be to buy whenever prices become cheap, i.e. going below the value area low, take partial profits when it hits the point of interest, take full profits when it gets expensive, or short whenever price goes above the volume area high, partial profits when price hits the point of interest, full profits when it becomes cheap. So this is the basics of what the volume profile is, and I even gave some hints on how to use it. But now it's time to go over an actual strategy that you can use right now. And for this example, we'll use AMD as it's been pumping recently and a lot of people are trading it. And if you use the volume profile, you could have entered in before everyone else. Now, the volume profile will work on any time frame. The 1 minute, hour, daily, literally every time frame. So you can really implement it with whatever strategy you're currently using. But how I like to use it is on larger time frames to create a strong bias, as these higher time frame volume profiles will give clear, strong levels that institutions are watching very closely. So for this example, we're going to be using the weekly time frame. Now here, AMD had a strong uptrend. Now, if you're using normal technical analysis, say supply and demand, you would have a demand zone, or in other words, a support here, 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 and here. And you really wouldn't know which levels would hold or which ones to trade. So you'd basically be guessing. But if we add the volume profile, it'll tell you exactly where you need to be entering. So grab your volume profile, mark it from the low to the high of this move. Again, we have our three main levels: our volume area high, our point of control, and our volume area low. Next, you can easily see that price consolidated a lot at our high volume nodes. You can see we had high volume down here, price consolidated. We had high volume at this point of control, price consolidated. We had somewhat high volume here, price consolidated. Then you can also see price spiked up fast at the low volume nodes. Also, a key reminder, 70% of all trades happened between the volume area high and the volume area low. So in order for prices to be attractive, we would want to buy either at the volume area low or below it, as that is signaling prices are cheap. And it just so happens there's a demand zone right at our volume area low, which is literally textbook. We wait for price to come to our area of demand at our volume area low. We enter the trade here, and just look at this. Price spikes up fast here with a huge 300% move, and if you look closely, it literally started right here where we entered. But it keeps getting better. So now currently we are above our volume area high, meaning prices are really expensive right now, which means prices will likely want to revert back to our previous point of control. And what do you think happens? Price literally goes all the way back down exactly to the point of control, stops exactly there, then proceeds to start heading higher again. Hopefully you guys are starting to understand the power of this tool. If you use it on higher time frames and are patient enough to wait for the levels to get hit, this tool can be insanely accurate. Let's do one more example. This time we'll do Paramount. First, we go to the weekly time frame, grab your fixed volume profile, mark from the low of the trend to the high of the trend. We instantly see our volume area high, point of control, and our volume area low. Right now, price is above our volume area high. So we can now assume price is expensive based on past volume and will want to mean revert back down to our point of control. So we enter a short trade, wait a bit, and that's exactly what happened. But since price came all the way down and is now past our volume area low, we now know price is considered cheap based on past volume. So this time we enter along, and yet again price spikes up immediately exactly from this point with a 888% move. I am not making this up. This tool works extremely well, and that's exactly why I'm sharing it with you. And right now we're using this tool just by itself. It becomes even more powerful when you add other confluences like supply and demand, normal volume, and price action tactic. If you got some value from this video, I'd 100% recommend joining my Telegram. It's completely free to join, and I share value just like this in there all the time. If you want to check it out, I'll leave it in the pinned comments. I'll see you in there. Thanks for watching, and I'll see you guys next time.